Hey, good morning, everybody. Welcome to Monday. Hope everybody had a great Father's Day, had time with family and friends. We did, had a great weekend. And so back with you this week as we get ready to head into the week. Not a lot of reports coming out. We're really towards the end of earnings season. But I did want to remind you again that we've changed up our free report this week. You know, one thing I know for sure is that we only get one shot at retirement. It's not something that we get over and over, we can redo over and over. It's a once and done, man. Once you pull that trigger, we're pretty much done. Yeah, you can go back to work, but that's not fun. So I put together this free report on retirement strategies. All you have to do is text the word retirement to 863-285-3815 to get your free report. That'll help you look at different options that you need to consider as you get ready to head into retirement.
5.7 Light FM. Gwen Stefani's there. Hi, good morning. I am so glad you're here today. We're at 8:37. Time to check in and find out where the money's going this morning up on Wall Street. Time to check in downtown Sebring to the offices of Statler Financial Services, where Phillip Statler is standing by. And we start out the morning with one of those indexes and reports, Phillip, that we generally would kind of blow off, except when we're looking at weird times like we're in right now. The Empire State Business Index actually does attract some attention, doesn't it?
Yeah, it does, Dave. You're right. It's one of those we blow off a lot of times, but this time it's one of the few reports we actually have today. So a little bit more focus on it, and it was not a good report. The Empire State Manufacturing Index plummeted 26.4% to a negative 8.6. And so economists had expected it to be a positive 10. The last time we saw a negative number in this index was back in October of 2016. And that negative number, Dave, kind of indicates not only just a weakness, but also the possibility of the start of a contraction in manufacturing.
Yeah. Number one, the last time we saw this, it was right while things were in a funk right before the election, where we were going absolutely nowhere, right before the presidential election. And it also kind of seconds the motion from that Morgan Stanley report that you mentioned on Friday. Got a lot of play in the financial press over the weekend, where they're saying the last time they saw business conditions trending in the direction they're trending now was right before the big crash. Now we got two kind of independent, semi-credible indicators that, well, gosh golly, there's a downturn coming, and that shouldn't come as much of a surprise to anybody that's been listening to you and me saying, hey, it's not going to last forever, people.
Exactly. We talk about the business cycle, and there's expansion, and then there's late-term expansion, and then we actually head into contraction. And so eventually our business cycle is going to get to contraction, which will lead us into a recessionary period of time. The thing is, how long will we stay there? That's what's important, and that folks are ready for it when it actually starts to happen.
Absolutely, and that's kind of the advice that you've been throwing out for a long time, getting some stability into one's retirement account. The thing that you always hope in a recession is that the Federal Reserve will manage it such that it's a quote-unquote soft landing instead of a major crash. And that might happen this week because the Federal Reserve's Open Market Committee is meeting. And this, I'm kind of guessing that the stocks are going to be kind of holding steady for the bulk of the week, waiting to see what Paulson and the Federal Reserve do on Wednesday, because we've been talking about the likelihood increasing of the Fed decreasing interest rates. That doesn't necessarily mean this month, right?
That's right. It doesn't. But I mean, one step closer would be a change in their language and their reporting that would indicate maybe that they will seriously consider lowering interest rates. I mean, I did see a headline thinking that, hey, they'll surprise and cut. I don't see that really happening. I think maybe they set something up for a July type cut. But let's face it, Dave, they don't have a lot left in their arsenal to even soften the blow, given where we are today.
And that's the challenge, and the thing that we've been harping on for a long time, that these interest rate increases aren't comfortable for people owning investment stocks that tend toward being interest sensitive. But the Fed needs to have some tools in its toolbox to give us some stimulus when the inevitable turn back happens.
Yeah, and that's inevitable. There's going to be a turn back, and that's, the folks I've sat down with recently, man. When I look at their portfolios, they're still got a lot of risk in their portfolios, and they don't realize it. They don't sit down with their advisor very often, and so they don't see what they really have. Dave, I got to say, right now is a very important time for folks, especially if they're 10 years out or less from retirement, that they really and truly get a serious independent look at their risk in their current portfolio.
I get personal on that. I saw my asset base go down by about 70% during the recession in '09. My retirement account that I didn't touch ended up recovering nicely, but then again, back then, I had 15 years to retirement. I would hate to see my retirement go down by that much right now, and I'd imagine a lot of folks are in the same boat.
That's right, and unfortunately, a lot of times it's out of sight, out of mind. They've got that 401k, they got that IRA, they don't think about it. But it is something they need to remember, because a lot of times what I see is that, advisors out there don't sit down with their clients on a regular basis, so they don't really know where they are.
And the risk is there, especially when you're not looking at what you're invested in. We're talking about general principles, largely because it's a relatively slow news week, at the very least for today. Paris Air Show is going on, which we'd normally consider a major yawner, but this is going to be an opportunity for Boeing and Airbus to kind of go head to head and make some announcements as to whether or not either one, most notably in our case Boeing, whether or not they can sell any airplanes. And a big announcement from Boeing would really help a stock that's been getting kicked where it hurts lately, wouldn't it?
Yeah, it would, because Boeing has definitely not had a great couple months. And they could use all the help they can get to kind of help bolster their stock back up.
You and I were talking about faith in equities overall, and we were talking about bond rates. Another item that we've been watching has been federal bond rates. We're relatively, and I say relatively, stable on Treasury notes lately. You said you noticed a little bit of a decline in the 2-year, but at the very least, things are starting to line back up in a relatively normal order, except for the 3-month being a little higher than the 2 and the 5 years. At the very least, some of that inversion process is going away on interest rates, isn't it?
It's getting skinnier. The lag between that 1 month, 3 month, 6 month, and the 1 year, 2 year, 3 year, it's getting less and less, which is, I guess, a good thing, other than even shorter term interest rates are starting to even slack off more than what they were last week.
It's one of those times where there's not a lot of faith in the equity market, but they aren't really getting out of it as fast as one would expect now at the moment either. It's been there really hasn't been anything over the weekend to scare people one way or the other, has there?
No, there hasn't. There's not been a bunch of news, and there's not much left on the earnings front. I mean, I was kind of scanning through earnings, major earnings for this week, and I think we have less than 75 or 80 earnings coming out this week. And none of them really big household names. So I don't suspect that we're going to see much in the way of earnings driving this marketplace. And I mean, we got a few things left on the economic calendar, like the Fed meeting. That was important. That'll be important what comes out on Wednesday. Some new housing starts. But other than that, it's a slowing calendar.
It has. Third week of the month is normally kind of a droll-to-rum period. The Federal Reserve meeting is going to be the big thing probably for this week. Setting the table for us, our Friday action was modest, to say the least. Dow was off by 17 points, NASDAQ off by 40, and the Standard & Poor's off by about 4.5. The Dow and the S&P were almost in boring range. NASDAQ did manage to lose a little over 0.5%, which is not good news for the tech stocks. 45 minutes before we open on Monday morning, Phillip, do we have any kind of direction where we're going today so far?
I can't really say it's in any kind of major indication, because we're up most things less than 0.1%. The Dow's up $21. The S&P 500 is up $2.50. The NASDAQ's up 0.25 point. It's up 18.5. We've got gold trading down just a tad. It's at $1,343 an ounce. We've got silver slid back down below 15. It's at $14.86, which is up about 0.4 from where it was on Friday's close. And we've got crude oil down about 0.8 right now to $52.09 a barrel.
And that's at least a little bit more comfortable range than we had earlier. Overseas markets, by and large, the Asian rim was up modestly, kind of like us, just modestly overnight trading. Europe is mixed at the moment. The British markets are off by a tinge. German markets are up by a tinge. But again, there's very few exciting moves anywhere in the world today in terms of finances. Philip, we were talking about the need for stability and the need for an independent look at one's financial portfolio. How do I get a hold of you to do such on the phone?
Dave, they can give us a call at 382-0037 to schedule their free financial x-ray report where we look and see how much risk they have in their portfolio, and we do a fee analysis to determine what they're really paying in cost. Now, this week we're offering a little different free report. You know, you only get one shot at retirement. You need to make sure you do it right. And so we've put together a report on retirement strategies, and folks can get that really easily. All they have to do is text the word retirement to 863-285-3815. I hope they'll like our page on Facebook at Statler Financial Services, and then join us every weekend, Dave, for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. on Sunday mornings on News Talk 730 a.m.
And that gets streamed at newstalk730am.com. And coming soon, folks will be able to listen to us streaming as well on our website on Light. Philip, thank you so much. I do appreciate it. We will catch you in the morning, all right?
All right, man. Thanks. You take care, and we will talk to you tomorrow.
Thank you much. Be well, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Stop everything.